Are we in a recession?
I don't think so. We could be before long, but I don't think we are right now.
Give us the dynamic from you can surmise a lot from the oil and gas markets. I always believe. It's a great indicator, macro indicator of the economy. What would you be looking at to suggest that we're heading that way? Oh, but we are heading that way, right?
It's possible.
Okay.
I'm not all the way there yet. So I think you look for industrial activity. You look for demand for the more marginal parts of the energy demand cycle. Our company produces primarily natural gas. And right now there's a big secular demand growth of natural gas out of the U.S. because we are creating all this new export capacity. So if we're going to have a recession that's going to be a problem for natural gas in the U.S., it really has to be a massive worldwide recession that pushes down demand for gas in a way that's pretty hard to fathom.
Although you guys are an outlier a little bit in the sense that we do have demand that's, I guess, baked in, keeps a floor on stuff because of AI and crypto, correct?
Correct. There is a bit of a power demand. That part of energy demand is pretty inelastic. Electricity for residential, electricity for a lot of uses is pretty inelastic. It becomes seasonal. There's a lot of incremental natural gas demand in the winter, obviously, when it's colder. But that seasonality still is somewhat inelastic, weather adjusted.
What is the, how much capacity does AI and crypto add? Can you add it to your bottom line? Do you know where it is?
Well, of course, we don't have the crystal ball. We'd like to think we do, but we don't. So let's put it into context this way. The U.S. produces about 105 BCF a day of natural gas today. And we think that AI-driven electricity demand will result in an incremental 5-ish BCF a day of demand growth for natural gas before the end of the decade. On the other hand, we think there's 15 BCF of growth coming from incremental export capacity for LNG. So the AI story is really important, but it's about a third the size of the LNG export story.
Interesting. Tariffs impact you guys?
They don't seem to be impacting us a lot at the moment. By the time you get gas on the water, it's pretty fungible. There's a lot of trading that happens. And again, you have each incremental molecule of gas that goes on the water is filling what is currently unmet demand in the world. And so there's just a huge shortage of energy that this incremental export capacity is filling. So
you take China out of the mix, which at least as of yesterday, maybe today it's different. I don't know. I haven't read the headlines. Let's just say they're out of the mix. How does that impact you guys?
It really doesn't. So what will happen is as cargoes get put on the water, they get traded. Each cargo of LNG that gets put on the water is likely to get traded anywhere from 6 to 10 times before it's created until it's actually delivered somewhere. And so all of that trading will allow for everyone to feel good about where they're buying gas from and where they're not. And you've already seen that cargoes that would have otherwise, may have otherwise gone to China are getting sold into Europe or other places. And so that trading happens and it becomes fungible.
So you have the ultimate business. Everybody should buy your stock. You know what's coming
next.
I think
so, yeah.
Why is it trading below the average analyst estimate? Someone's not buying it.
Yeah. Actually, I'd like that there's an analyst estimate average that's higher than our stock price. I think that shows that there's expected growth. We, within the last month, hit an all-time high for our stock. And to then have target prices that are well in advance of that, I think is pretty encouraging. And that's really about this secular growth for natural gas. We've just completed a merger in the last year. We took Chesapeake Energy and Southwestern Energy, created Expand. We're the largest natural gas producer in the United States. The demand growth for natural gas is really not debated. And so we will be a big beneficiary of that. We've taken a tremendous amount of costs out of the system with the synergies of this merger. And we've put ourselves in a really great position to benefit from all this demand growth. So we like the fact that there is an expectation of growing stock price.
Or something's wrong. Is it saying something's wrong?
I don't think it's saying anything's wrong. I think we are seeing that demand growth happen right now. It is occurring during 25, 26, 27. And so there is an expectation that we will be delivering more volumes to market at higher prices. Our cash flows are going up.
I did a little research on you, and to the person, said you're an excellent CEO. Okay, I don't say that, just off the top of my head.
You didn't talk to very many people, I guess.
No, I did.
That's nice. Thank you.
You have a very good reputation as a great technical, great hands-on CEO. How did you get here from being a banker? Was it like, you initially sold your soul coming out of college.
Right.
And then you kind of thought you'd...
Went through a recovery program.
Right. Detox.
Yeah. So I joined the company 16 years ago, and our company's been through a tremendous amount of distress. I joined the Chesapeake Energy side of what is now Expand. Chesapeake Energy has played a really important role in the shale development in the United States, really led the shale development into what it is. And as a result of that, had a pretty interesting history of really rapid growth that was fueled by a pretty heavy balance sheet load. We had a lot of debt. I spent 11 years as CFO, most of that time trying to work that debt balance down and reorganize the company in normal course. Ultimately, during COVID, we filed bankruptcy. And then post-bankruptcy, with a clean balance sheet and an ability to have a renewed strategy into this really great macro backdrop where there is this secular demand growth for gas, our board asked me to take on this role, and it's been a lot of fun.
And then you did the merger.
And then we did the merger.
What was the spark for the merger?
So we have a great portfolio of gas assets across the Appalachian Basin and the Haynesville Basin. We're really the only large player that has a position in both. Southwestern had a position in the Haynesville as well. The Haynesville being a really important strategic gas asset for the United States because it is so close to the export capacity in Louisiana, but is a higher cost basin to produce from than Appalachia. We wanted to lower our cost in the Haynesville. And we are delivering $500 million of annual synergies.
Oh, absolutely.
That merger.
Absolutely. The Trump administration wants you to keep drilling. Was it drill, baby, drill? Does that bump up against reality at some point? Price levels?
A little bit. So what I like about the way that conversation has evolved is Chris Wright and Doug Burgum, who jointly lead the National Energy Dominance Council as the Secretary of Energy.
Dominance?
Yes. Secretary of Energy and Secretary of the Interior. They will describe that drill, baby, drill really means build, baby, build. And with that, they're talking about infrastructure. If we have better infrastructure in the United States, you will see the oil and gas industry increase supplies because that would mean we can deliver energy supply where and when it's needed more effectively, and we can earn a return on our capital.
And why don't we?
Why don't we have infrastructure?
Yeah.
I mean, the permitting challenges of building anything in the United States over the last 20 years have just gotten worse and worse. We don't build electrical transmission lines, let alone pipelines.
Yeah. No, I mean, everybody thinks infrastructure is roads and bridges, but it's more complicated than that these days.
It is.
Does the Secretary of Energy understand this challenge?
He understands it maybe better than any other American.
Really?
I absolutely believe that. He is a very intelligent guy who has studied energy markets.
We're talking, what is...
Chris Wright.
Chris Wright, that's right.
Has studied energy markets his whole career. He was an MIT engineer, and this is what he's based his life on.
And so where do you think he starts with this, on this infrastructure aspect?
The whole industry is talking to the administration about pipelines, about the capacity of the electrical grid. Infrastructure has to be the right infrastructure in the right places. I'll give you an example. We all talk about the growth in generation capacity that's needed to meet the demand for AI. We need more electricity in the U.S. That's pretty clear. And it's exciting. That's growth, and that's productivity for GDP. AI is going to be an incredibly powerful driver of our country's GDP. We have to have the right energy to do it. Well, we have currently an installed generation capacity in the U.S. of 1,300 plus gigawatts of power. There's about 10% incremental gigawatts under construction today. The problem is 84% of that is renewable.
Huh.
And there isn't a data center on the planet that can go sign up for incremental generation capacity from a renewable source. It doesn't work.
It doesn't work. It's
doesn't work.
Unreliable.
Yeah. I think it's great. Go ahead and build it. That's fine. But it's not reliable for things like data centers for base load demand. And so, for example...
You can't use solar powers for...
You can't. You can't. Not until we have dramatically advanced battery technology to store enough solar and wind. And even at that, you're still going to have an overall capacity factor that's going to be challenged. The capacity factor, so if you have a gigawatt of renewable generation, it'll run on average at about 30% capacity for a year. So that means you'll get 300 megawatts out of a gigawatt of installed capacity.
I don't know.
That's not very
means,
effective.
but
It means 1/3 of it works.
Okay, gotcha.
Is effective for you.
That's interesting. Do you see nuclear power being a competitor of natural gas? Because, I mean, there is some, now with Trump in there, deregulation, nuclear power is starting to make a comeback, so to speak, at least, rhetorically.
Yeah, in its most bare sense, nuclear power absolutely competes with natural gas because they're both baseload. But I don't really see it as competition that I'm anything other than excited about because we need it all. And just as a citizen of this country, I want to see a lot of nuclear built. It's a great solution. I want to see the costs come down. I want to see it have effective regulation so that we have confidence in where it's being built and how it's being managed. And that's all very possible.
That wouldn't put you out of business, though?
I mean, if it were wildly successful forever, theoretically, yes, and I'll take that. That's great. We are so short energy in the world that I think we need it, and I welcome it.
At what price point do you start losing sleep? I mean, we're at $3 now. You were explaining it's more to that.
Yeah, so last year was a lousy price environment for natural gas. We spent the average for the year Henry Hub prices like $2.27. We don't make money on new drilling at those prices. So I don't know that I lose sleep because the great part about commodity markets is that low prices cure low prices. So when you
explain that,
yeah, so when you have low prices, we all stop drilling. We all stop bringing new supply to market. Therefore, you have less supply to market, and prices go up. Commodities are in decline every day that you don't add something new. Right, a well is always declining. So the aggregate of all the production in the U.S. is in decline and requires new investment just to hold steady. When you pull back that new investment, you see decreasing supply. Low prices result in decreasing supply. We saw that throughout 2024, and now in 2025, we need to grow it again.
You were going to increase capacity in 25 and 26. Right. Still on track for that?
Absolutely.
Really?
Yeah, we made that decision based on our view of a long-term cycle, 2 to 3 year look, and we made that decision on a long-term cycle price around $3.50. And right now, the prompt price for gas is at $3, and the 2026 average price is above $4. That seems to hold. The fundamentals are still the same. They really haven't been impacted by the recent volatility.
You want to achieve, or your company wants to achieve, carbon neutrality, so to speak. Why would you care about that right now in this environment? I mean, ESG is on the way out.
Yeah.
The Trump administration is like,
Yeah, look, I think environmental stewardship still matters, and we should all endeavor to have as clean of a business as we can have. Given that we produce mostly natural gas, and within that mostly dry natural gas, meaning we don't have natural gas liquids, which involve complicated tanking systems that have to ventilate and all that, we have a relatively straightforward path to creating a very low carbon molecule. And we think that's valuable. We know it's valuable to the people that buy LNG from the U.S. They tell us. They pay for it.
Really?
Absolutely.
Are investors asking for that out of you when you go meet with BlackRock? I mean, BlackRock is
they
one
care.
that usually. So they're still pounding the table on it?
Define pound the table. I would just say that they have cared and they still care. I would say we probably spend a little bit less time talking about it, primarily because if you look at the emissions factors across the industry, we sit at the very, very low end because of the assets that we manage and the efforts we've taken over the last 15 years to reduce emissions.
Price of oil right now, you follow that obviously.
Sure.
What do you think about those markets these days? They're signaling worse than yours. I mean, and there might be a better barometer of a sort of forward-looking economic outlook.
Yeah, I think there's two challenges to oil markets today. I think there's an unknown tariff impact that people are trying to figure out on the margin. A recession means something negative to oil markets, and where are we going to be in that spectrum? The second is there's clearly a lot of geopolitical pressure around what the U.S. is going to do, what Saudi Arabia and Israel are going to do with respect to Iran, and what OPEC will do in response to all of it. OPEC Plus has held as a extension of OPEC since COVID, but you see in all the rhetoric coming out of Saudi Arabia some fraying or frustration of that. So I think there's the two big features there that are creating a lot of uncertainty.
any macroeconomic forecast a year from now? Where do you think we're going? Is it too hazy until we figure this out?
Yeah, it's a little hazy in the near term. I think there's the big challenges, of course, are where are we going to land on tariffs, and does it push us into recession? Is that recession going to then create a good outcome? I think that's still possible if we, in fact, do go into recession. We still have a lot of challenges around our overall country's balance sheet and refinancing our debt. So interest rates are probably going higher. But in order to make all of that work, if we have a growth agenda...
Do you think the market's going to push the 10-year and the 30-year higher?
I think that seems likely to me. But I think we could have an economy that's growing into that feels pretty good for our population. I don't think that's necessarily catastrophic.
Interesting. You think the Fed's going to cut rates this year?
Can't predict that.
You covered everything I was going to ask. And you know what's great about you is that you're the type of CEO that wants to get off the stage fast. And by the way, his PR people taught him that. I just spoke to him. So, I'm done. You want to say anything else?
No, look, we're excited about the role gas is playing in the world today. And we're excited about the role it plays both domestically and internationally. It is super strategic that the U.S. has massive energy resources. And the problem that we have, the challenge that we have, is connecting those energy resources to the markets where they can make a difference. We have energy poverty in the U.S. We have energy poverty internationally. It all gets solved with infrastructure. We have to embrace the building of things so that we can have a growing economy, so that we can get ourselves through the challenges of refinancing our debt and creating more opportunity in our economy that can be fueled through AI.
Well, how do you get now that you brought that up, how do you get the Trump people to really focus on that? I mean, they seem to be all over the place. That should be a key.
I actually think they are focused on it. I mean, there's a lot of challenges in trying to understand each of the day-to-day steps that are taken, and I'm not nearly smart enough to understand and follow all of the moves. But I do think that they understand we need a growing economy. We need to invest in this economy to grow effectively. And that requires infrastructure. And I talk about pipeline infrastructure mostly because that's the closest to our business. We need lots of infrastructure. We do need roads and bridges.
Right.
But we need electrical transmission lines, and we need all sorts of things that will facilitate growth in our economy.
When was the last time you talked to the Energy Secretary?
2 weeks ago.
What did he say?
He said, my job is to encourage growth in this country.
And infrastructure, did he mention the words?
Oh, absolutely. Constantly.
All right. We'll end it there. Thank you.
Thank you.